So Ross, for years this has been the story, but a lot of people were wondering, is it finally going to pick up given the money washing through the economy? The answer so far seems to be no.
Yeah, that's pretty much what these numbers have come out, which are well below the forecasts of the markets before this. And clearly the Reserve Bank will now think it's on the right, if you like, path in regards to keeping these interest rates very close to zero in Australia. So the March quarter has come in at 0.6%, which means annual inflation is 1.1%. But both of these numbers, as I say, are well below the forecast. And it really does show that there are parts of the economy that are soft. It means that businesses in particular are struggling to pass through price increases. And as yet, there's no wages inflation that's creeping into these inflation numbers. In other words, shortages of skilled labour in particular are not causing significant enough wage rises to see companies having to raise prices and as a result create that inflation.
So you mentioned there the Reserve Bank. This is the interesting part. We would assume it would say, well, any commentators talking about increasing the interest rates, the official cash rate, inside the sort of 3-year band, look, they're still wrong, but you've got housing still on a tear. So perhaps we'll see some sort of, micro measures there from APRA and so on.
Well, that's what ultimately could happen. The interesting part about this is, what does the Reserve Bank do? Bear in mind that the Royal Bank of Canada, the equivalent or the Bank of Canada rather, the equivalent of the Reserve Bank, has only in the past week or so started to ease back some of its quantitative easing, in other words, money printing. And that's been the first central bank in the world to do that. Now, based on these inflation numbers, some were anticipating that maybe the Reserve Bank would go down a similar path of literally tapping the brakes to try and give a signal that these low interest rates will not be around forever. But I can say the Reserve Bank, off the back of this, will not be changing its policies. Oddly enough, there have been a number of banks that have been raising 4-year fixed rate loans in just the last little while. The latest of them, Westpac, today increased its 4-year fixed rate mortgage from 1.89 to 2.19%, which gives you a signal that the banks themselves were anticipating some inflation coming that might have started to squeeze the Reserve Bank to push these interest rates higher sooner rather than later.
Ross, you were at the address earlier this year with the Reserve Bank Governor who said it's all about wages. Labour shortages, of course, can mean that wages go up, but the current ones seem to be a function of our closed borders. So it's all linked. Where does it go from here?
Well, the question there, I guess, Tom, is whether the Reserve Bank, which it does from time to time, especially say there's a cyclone and fruit and vegetable prices go up because northern Queensland's been wiped out for a period, they tend to look through any short-term blips. So if the Reserve Banks, for example, were to say, well, we think eventually borders will reopen, we will get skilled labour back into Australia, and that will take pressure off wages in this country, then they'll tend to look through it and as a result maintain their policies. But do note there's other things that are rising in price. Say, for example, the price of fuel as compared with this time last year when prices were pretty much around the country well below $1 a litre, now around about $1.50 a litre for standard unleaded fuel. So there are elements of inflation creeping out. Another one is jewellery, oddly enough. And in the case of jewellery, it's mainly because metals prices have increased around the world, and that's literally led to increases from manufacturers of jewellery here in Australia as well. So, but at the moment, though, broadly, inflation is not there. And if that's the case, then the Reserve Bank doesn't need to change anything.
It doesn't. Just quickly, question without notice, Ross. Apologies if you haven't seen this. I was looking for it. Childcare, because that's a potential policy from the government. The inflation there's been pretty high lately.
Well, that's true. And the important part about childcare is quite clearly that right now the government wants more people in the workforce. And if that means you can get more women in the workforce, and bear in mind that some of the biggest increases in employment over the past 6 months have been women re-entering the workforce. Now, if the government can make that easier by basically creating either more childcare places or making childcare more affordable for families, then quite clearly you're going to find more women even from now going back into the workforce, which helps families be able to afford their mortgages. That's the reason why it's a key. The problem is, if there's only limited childcare spots, that creates inflation simply because the operators know that people will pay anything to have their kids looked after.
They sure will. Ross Greenwood, thank you.
No problems.